Hello, everybody. This is Dave Gilreath from Sheaff Investment Advisors. Remember, we're the firm that uses innovative portfolios for intelligent investors like you. So at the end of the year here, this is the end of November right now. The market's down because of today, because of the COVID lockdowns in China and whatnot. And there's all kinds of terrible things in the news. But despite what you read, in my opinion, there are reasons to be hopeful. And we wanted to go over some of those today. I'm going to share my screen with some slides, and we'll get right on it. So the news, as I said, is terrible, but there are reasons to be hopeful. You see all kinds of headlines like the war in Russia and North Korea trying to do nuclear, increase their nuclear capabilities. China is having all these protests. The Fed is still going to be raising rates, and some people think it's going to keep going for a long time. Some people don't. There's rumors or there's headlines about the stock market being way overvalued and a crash next year and things like that, and why there would be a global recession is basically inevitable. But a couple of things we've shared in the past, and we just like to reiterate, the 12 months following the midterm election, and we had the midterm election, 3 weeks ago, something like that. The S&P has not declined in the 12 months after a midterm election since 1942, so post-war time. It's a long time. And right now, the S&P is up about 4% from the election day, not up very much, but nonetheless up a little bit. Now, interesting point. In 3 of these periods, inflation has been dropping. It's been decelerating. And that happened in 1974, 1982, and 1990. And here we are again in 2022, and inflation is currently decelerating. In those years, previous years, when inflation was decelerating, the S&P in the next 12 months, the 12 months we're in right now, went up about 20% here and here in 1974 and 82, and it went up about 25% in 1990. So maybe this time will rhyme, I don't know. Right now, also, we're at a sweet spot in the calendar. So the presidential election cycle, broken up into 4 years, we're right now in the 4th quarter of the second year. So we are right here. And these periods, circled in red, are the best calendar periods, best quarters for the stock market of all periods. And so we're right in the middle of that as well. So that could help too. There is a lot of recession fear out there. As I had said, a lot of people convinced that we're just going to have this recession. It's almost a foregone conclusion right now. But interesting point, though, 2 things. First, a recession has not started in the 3rd year, next year, 2023 will be the 3rd year. A recession hasn't started in that year of a president's term ever. So the odds of a recession starting in the 3rd year, I think, are low, mainly because the incumbent party is trying to juice everything they can to get reelected in the next period. Lastly, the second point I'd like to make is a guy we followed for years and years and years, a guy named Ed Yardeni, fantastic economist, kind of thinks differently than many other economists. And he doesn't think there will be a recession starting next year. He thinks we're already kind of in a rolling recession, and that generally it's going to be, in this country anyway, a kind of soft landing. The Fed might actually do what they want to do. Another point that I think is interesting anyway is industrial stocks since the election, or since the 4th quarter, really, October and so far November, have been really strong. And these are the companies that make stuff, industrial companies, manufacture things. And they have been uncommonly strong, much stronger than the market. The dark blue line right here is the industrial sector and how strong it's been. And the light blue line is the S&P 500 overall. So industrial stocks have been strong, which tells me that they wouldn't be strong if there was a recession right around the corner, in my opinion. Lastly, news is terrible now. News was really terrible in 74, 1982, and in 1990. You can go back in history and look, but believe me, news was terrible. News is terrible now. Despite the news then, the stock market did very well. Despite the news now, we could have a really good next 12 months. That's it for today. Thanks for joining us. We'll be back with you next time.